Welcome to TradeTheMBI.com. This is John. This report is for the 7th of June. Well, we were talking about this just the other day, that our expectation was that without any real resistance space between this and the previous up-range high, and of course we still have the highs back here from, well, March all the way up to the mid 2800 range. Wasn't a whole lot of resistance, but we were expecting more of this move simply because we had fund monies coming in at the beginning of the week, and it was a modest move up, and we needed to see that there was going to be more interaction, and there was nothing precluding it. And in fact, we expected the S&P to need to pick up a little bit to catch up to where the NASDAQ is going. Hasn't quite met that, but at least the metric of moving in the right direction started to take place yesterday again, and we're seeing even a continuation of that here in the pre-market hours. And here we are from the NASDAQ standpoint, likewise much stronger from its readings from way back with the cyan under red and propelling. Of course, we still have the positive extremes right there for where the retrace levels, but we talked about that the other day. This is just clearly simple case of falling below the ABM and continuing to ride with that. Now, I've also been bolstered here by the break of the euro. Once it passed, like I said, over that 23, it had to prove this move. It just put in a positive extreme there, so that's going to be the retrace value back to the 23%. This is going to become a question of whether or not Italy's government is going to continue to provoke the EU, and whether that will create any systemic issues. Of course, the EU, again, keeps talking about ending their quantitative easing, which would bolster the euro, blah, 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 which is a bunch of talk just to kind of support things. But is that likely to happen? Yeah. Unlikely, but that doesn't mean that we still, within this kind of a downturn, often you'll get a return back to the 50% level within that. The real question will be here is the move of the steel, if we get a crossover turnaround, and or whether or not we get any kind of spider effect here, which would be green dipping, cyan rising. The next step would be a longer bullish run if we get cyan below red. So we'll be keeping an eye on that. But this shakeout's been a steady rise here from, the original dip of the orange below everything. And it's pretty strong from that standpoint. We had this ends actually, the cross right here is what we look for in the extended downturn at steel. Coming from above, that effectively ends it when you get that crossover. Literally took place right back there just before it broke above the 23%, in fact, which is kind of really solid signaling from a daily standpoint from the euro stand. And this, not unexpected, this hyper move for TLT was a bit crazy. And the question now will be whether the Fed will do its rate increase, and if it does, that will finally get us to net neutral on yield, because the rate would be equal to inflation. That would be the first time in a decade that we reach that kind of neutrality point, which then borders on, does the Fed become too hawkish? I've already said that I think that their move is a little early as far as really trying to dampen growth by raising rates a little too fast, because while all the economic numbers look super solid and everything, you really need that engine to be rolling before you already put the brakes on it. This trying to be ahead of an inflationary curve that hasn't shown itself to date, and particularly when you see this kind of a retrace in oil, there really isn't a justification for it other than them trying to reduce their balance sheet and reset to a bit of a normal. We saw that beginning at the start of the year, was this attempt to reset to normal market conditions as opposed to everything being backstopped by the Fed, which has been the case for the last, since the collapse. And here from a gold standpoint, you would think that that would be a strong bullish signal for gold. We've seen rising shakeout here and an improved DOC, just hasn't produced a catalyst spark yet. to drive everything. So here we had the intraday. We ended up with some positive extremes. After having reached our, gold signal came in above the 50, led to the 100%. Then we got a retrace, and then we got a gold just right here about the 76%, and that moved us, right up to the highs again. At this point, we started to have rising shakeout with cyan clearly underneath. And then the continuation, the exact opposite of what we talk about from a short standpoint, this where you have steel all the way underneath, continuing to ride, and all we did was just continue to have literally stayed with the ABM gold the whole way through this run. Didn't even get down to the 76%, and that's even continuing right now in pre-market here as we're exploding at this particular rate. So all in all, pretty strong behavior and very consistent with what we were looking for from the activity of new money coming in. So clearly the sell in May go away has already produced some real problems for people if they did that, because it's a crazy thing. It's another interesting one to end up with the secondary gold setup right here, which also led to highs and is still within that same gold move. It actually turned into an azure as well. That's this little dark cyan line right here, represents the beginning of azure. You had it happen over here. Then usually also, it can be a topping point, but not when you have this solid a reading of the DOC. So it lets you stay within that broader trend, even within a short-term chart, which is very nice to see. Yes, these are all a lot of positive extremes, so we know where the retrace values are going to be, so that's going to be an effective one on a decent short signal. But this meeting point right here, and the same thing you would look for from a short standpoint, where you get that expansion of cyan over green. In this case, you have green over cyan, so it does the exact same thing, and it's led to this burst out. So it met right there, expanded right here, and then boom, the explosion came right after it. So again, while it recognized it beforehand, not really. The accumulation had already taken place, and we were just getting it earlier than some people would see it. So it's just like an added bonus of being ahead of the curve on it, and being able to take advantage of all new buy opportunities every single time the shakeout dips and turns back above. It's been solid from a buy standpoint there. So very effective. As always, though, I will continue to put up any relevant charts on the Skype chat. Last days of school for girls, which means much more programming time, which would be very nice, not having to be a shuttle bus all over the place. As always, though, trade well, and we will talk again later.